Welcome and thanks for joining us at EMII.com. I'm Kathleen Reddington with your hedge fund headlines. Today is Thursday, July 17, 2008. According to new data from Morningstar, hedge funds suffered losses in June, bringing second quarter returns to the low single digits, according to Alternative Investment News. The Morningstar 1000 Hedge Fund Index dropped 0.73% in June, bringing second quarter returns to 2.07%. and a year-to-date gain of 0.31% for the index. According to Nadia Van Dalen, a hedge fund analyst at Morningstar, volatility returned to levels not seen since March amid fears of recession and rising inflation. The firm's hedge fund flow data shows that through May, Morningstar rated 4- and 5-star hedge funds experienced inflows that exceeded $10 billion, while the 1-, 2-, and 3-star hedge funds lost nearly $10 billion. And staying with hedge fund news, Bloomberg News reports that in an effort to stamp out suspected manipulation of Lehman Brothers and Bear Stearns shares, the U.S. SEC subpoenaed Wall Street's biggest firms and hedge fund advisors. The SEC's enforcement unit demanded information from investment banks, including Goldman Sachs, Deutsche Bank, and Merrill Lynch. The Washington-based regulator is seeking trading records and emails. The subpoenas mark a new front in the broadest U.S. investigation of Wall Street since trading state and federal regulators targeted mutual fund abuses in 2003. And in more hedge fund news, hedge-fund.net reports that Danish fund Danfords is launching frontier hedge funds that fuse elements of a public market hedge fund strategy and a private equity model. According to the firm's website, it has a few funds in the works that will be managed by Danfords Investment Management, including an incubator for seed investors, Sequester Corporation, and an African credit fund. CEO Daniel Broby says, "What we are seeing is a generational change, the industrialization of the final countries that have been left behind." He added, "You either believe in the opportunity or you do not. We don't try to convince investors, we merely structure the best way to capture that opportunity." And in other hedge fund news, according to The Australian, seeking approval to increase its stake in the Chinese-controlled Midwest Corporation beyond 15%, U.S. activist hedge fund Harbinger Capital is looking to play a bigger role in developing Western Australia's Midwest iron assets. The fund, an early backer of Fortescue Metals Group and run by New York billionaire Philip Falcone, says it increased its stake in Midwest to 15.09% from the 12.53% announced on Monday. The purchases, which are keeping the share price above Cinesteel's cash offer price for Midwest of about $6.38, further boosted speculation that Falcone will try to orchestrate a merger between Midwest and Murchison Metals, which has a neighboring grounds which Harbinger holds for 18.9%. And that rounds out today's hedge fund headlines. Thanks for joining us on EMII.com. For more details on these stories and much more, click onto our hedge fund channel online and read the full stories and latest developments.